So without further ado, let's start with Macys. They slashed their full-year outlook on Thursday, saying sales were significantly weaker in Q1, but the stock was kind of resilient. It's actually up 5% this week. Is this this is a bail for you?
So, Kelly, when you look at Macys, I mean, this has been in a downtrend since 2015, and even more recently over the course of the past several quarters, this has been trading to the downside. And when you look at the report that came from the executives, and they noted their consumers are continuing to be under pressure. I mean, for me, when I see a burst higher in a stock like this, I want to continue along with the trend. So when I have a day where the market's up and it's trading directly into critical resistance zones, that's a shorting opportunity for me so that I can continue to trade this ticker down to more recent lows.
All right. Not Macys. Let's see if it's Dillards. They have some more positive news flow. They beat on earnings and revenue for Q1. They authorized a share repurchase program, a cash dividend. Shares are up about 3% over the past month. What do you think here?
So, Kelly, when you look at this stock, I mean, it doesn't look anywhere as bad as Macys does. I mean, on the longer term trend, we've had a pretty positive move. Earnings, they don't look bad. I like the fundamentals in the company. What I'm concerned about here is the way that it topped out in February and the way that the trend has reversed. So what we're seeing in a lot of the retailers that have been strong, especially retailers that were strong last year, is we're just seeing money flow out of those names, and we're seeing these longer term trends start to break down, especially as traders get more involved in semiconductors and tech. And so when you're looking at Dillards, I don't have a problem with the company, but I will note that there's critical resistance zones around 315, 320 that you should watch out for, because at this point, this is a key area where this stock could hit resistance and fall back downwards into about 260, 250.
Wow. Okay. It's at 307 now. So sort of like be careful of the head fake, maybe, in other words. That brings us to one of the biggest retail wrecks this week, which was Dollar General. Their Q1 miss on the top and bottom line. They slashed full-year guidance, but Loop Capital's Anthony Chukumba yesterday said he thinks the brand's headwinds are cyclical, not secular. You agree?
Well, you know, that is true, but at the same time, you have to look at these key areas of support that are breaking. And when you have a company like this that was incredibly strong throughout the pandemic, I mean, we saw these massive pandemic gains, right? And so at this point, those gains have dissipated. We have come back. We've lost all of those pandemic gains. And at this point, with those breaks and support zones and with the way that the consumer is changing, the problem is that there's not really very many areas left to hold on when you're looking at this chart. And so when a move like this occurs on earnings, it's one of my favorite trades. You know, you look and you pay attention to the news. You want to see companies that are having greater than expected news. And first thing on the open, if you can get in and trade that momentum to the short side, they can make for some really great trades. So this is one of those for me. I'm targeting pandemic lows on it, and I think it's going to continue lower.
Wow. All right. Sorry, Dollar General. Let's see about the name to buy. And this one kind of surprised me. It's Lowe's. That was the mystery chart we showed before the break. Shares are up a couple percent today, 1% over the past week, even after warning of slower sales ahead. Why does this one jump out to you, Danielle?
So I like this one because it's backed by solid fundamentals. They've continued to do well on earnings. They've also recently increased their dividend. And my favorite part about it is that it's consolidating on both the daily and the weekly charts. And those chart patterns are still holding up in a bullish manner. And so what I like to do is I like to identify charts like this that, yes, they may have some headwinds currently right now, but ultimately they're strong companies and they're going to continue trading higher. And so when you look at Lowe's, I am continuing to buy shares during this time of consolidation for an ultimate breakout, because additionally, I'll point out that, you know, even though the housing sector has been soft, people are staying in their homes. And so that is going to require trips to Lowe's, trips to Home Depot.
Yeah.
And so I would like to trade this up into about 230 and ultimately up to previous highs.
I always thought the same thing. You know, we bought our house 5-6 years ago, and it was years of doing stuff before, you know, you finally, every time you think you're on top of it, something breaks and whatever. So I totally take your point. Can I just quickly pick your brain about the broader markets? Like after a markets day like today in particular, what does that tell you about, I don't know, pick one, the S&P, the NASDAQ, the Russell 2000?
You know, Kelly, I love the market right now. I think it's making for great trading. Primarily for me, what I was looking out for was the major mega cap stocks breaking through overhead resistance that was faced in August. And so once we saw Microsoft break through those August highs, We're really seeing a lot of FOMO-induced buying. That's the fear of missing out. People were looking at those resistance levels and thinking that the market was going to fail, and when it didn't, people are coming in and buying and pushing stocks higher. So for me, I'm focusing on mega cap tech right here and semiconductors as well. The AI trade has been absolutely phenomenal, but I think the market is making for some great trading, and I think that people will continue to be surprised that we're going to continue seeing higher prices.
Yeah.